Welcome to Pre-Bell with William O'Neill India. My name is Rajshekar Kungari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into the podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Here is the Nifty's daily chart. It is very important to understand Nifty's price volume action to gauge the market, how the market is placed at the current moment, and also have a view on the market going forward. After making a new all-time high about 26,000 level, Nifty has been under some kind of selling pressure. In the process, it breached 21 DMA followed by 50 DMA. Currently, for the last 1 week, it has been trading near its 50 DMA, which is a red line here. Historically, 50 DMA has been a very good support for the Nifty. There are a few occasions where Nifty traded below 50 DMA, but within a week or so, it reclaimed 50 DMA. So we can expect Nifty finding support at the 50 DMA if the macroeconomic indicators doesn't depreciate or deplete going forward. On the downside, next support is at its 100 DMA. On the upside, 21 DMA has to be reclaimed by the Nifty index to have a clear upward momentum. Until then, we might see Nifty trading in a very close range, which has been the case for the last 1 week. So we might see consolidation on the Nifty's action. Coming to the market status, we are in under pressure. Recently, we have changed the market status to under pressure because the distribution day count was elevated to 4 and it also breached key moving averages 21 and 50 DMA. Going forward, if the previous high, that is 26,000 change, if that high is reclaimed by the index and if the index makes a new all-time high, we will change the market status to confirm the uptrend. On the downside, the distribution continues on the index, and if there is any further accumulation of distribution days and Nifty breaching 100 DMA, we might change the market status to downtrend. In such a scenario, we try to exit model portfolio stocks and stay in cash. Coming to the key news section and some of the factors which might impact today's trading session. Starting with NSE's news, the NSE is planning to stop weekly expiries of Fin Nifty, Bank Nifty, and Mid Cap indices from November 20. Fin Nifties and Bank Mid Caps have recently started trading the weekly expiries, but Bank Nifty has been trading on the weekly expiries since a long time. This is because recently the volatility in the index has increased because of the introduction of weekly expiries, and the retail investors which are new to the markets are also taking the derivatives route to make quick money. But when you look at the results, 90% or more are on the losing side. So NSE trying to mitigate those losses and try to bring stability to the markets. And some of the companies which are in news, especially because of their September quarter results, IREDA for the quarter revenue and profit grew 38 and 36% respectively, which is a very good sign of growth. Coming to Tata ELXC, the PAT has grown more than 24% to 230 crores. Revenue on the other side was up only 3% sequentially to 950 crores of rupees. EBITDA margin has seen a improvement of 70 basis point sequentially to 25%. Anand Rathi developers has also come up with their results for the September quarter. Profit was up more than 32%, and revenue was also up similar lines around 32%. And EBITDA margin has seen a sharp improvement in terms of margin around 60 basis point sequentially to 43%. USA inflation data for the September has come in. CPI inflation has declined to 2.4% in the month of September. This is against an expectation of 2.3. Coming to institutional activity, yesterday foreign institutional investors were net sellers. They have been net sellers for a long time. This is one of the reasons for Nifty's decline. They have sold more than 4,900 crores of Indian equities on net basis. Domestic institutional investors have been trying to give support for the Indian markets. They have bought more than 3,800 crores of Indian equities. Coming to the global market update, US market closed with a negative territory, a flat to negative territory, we can say, because the magnitude of decline is not so higher. Asian markets are trading mixed as we speak. Shanghai is trading with a decline of more than 1%, whereas Kospi and Nikkei are trading with a gain of 0.3 to 0.6%. Overall, the global cues are on the mixed side. There are no clear cues on the global side. GIFT Nifty is also indicating a similar kind of cues, not much on the opening side. We might see Nifty opening around 25,000 level and hovering around 50 DMA in the today's trading session as well. For the charter video, we picked KPT Industries. It's a very small market cap company. Ideally, we do not consider small market cap companies below 800 or 900 crores of rupees. But for educational purpose, we have taken this chart because the ratings have been looking very good for the company. Exceptional ratings starting with EPS of 93, price strength of 93, and ABD rating of A minus. Return on equity is also very good at 22%. Number of funds section, you can see a very small number. Just 2 funds have been invested into this company. Just look at the market cap of the company. It's just 400 crores of rupees. So it's a very small market cap company. But the chart is looking very good. Base formation has been very ideal. During the base formation, the volumes dried up. And when the right side of the base formation has happened, the volume has also picked up. We are not advising here to take initiate positions, but we are trying to analyze from the owner's perspective. Couple of pointers which are not favoring us is one is low market cap and low number of funds. Otherwise, it's a very good stock if you look at the chart and ratings. Thank you for joining today's pre-bell. Have a good trading.